Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, enlightened investors. So happy to be back with you today as we explore scaling at speed and how to grow our multifamily syndications quickly. The founder of Blue Lake Capital, Ellie Perlman, with a diverse and international background to be envied, has over a decade of experience in real estate investment, law, and property management. Under Ellie's leadership, Blue Lake Capital owns and manages over 3,350 multifamily units across the United States, valued at over $750 million. So, Ellie, take us into the show and share words that helped you to be who you are today.
Yeah. Hey, Alan, very happy to be here. The experience that helped me get to where I am today, I started as a real estate attorney. And I say that I started as an attorney, but there's a lot of years before that happened where I was working very hard to get into that position that would be able to get into law school and graduate. But I worked as an attorney and I realized pretty quickly that I wanted to be my clients. I wanted to be the one buying real estate. I did not want to draft contracts. I did not want to represent clients in courts and do all the things that kind of I felt like I was a second chair. And I wanted to lead those transactions. And so, at some point I transitioned from law to property management. And I remember some people were raising an eyebrow and said, "You're going to be a property manager? I mean, it's much more lucrative to be an attorney." I said, "Yeah, in the short term, you're right, but not in the long term." And so, I wanted to learn how to manage assets, how to manage commercial tenants and residential tenants. And so I became a property manager. And that was kind of the second phase in my real estate, career. And all of that happened in Israel. I don't know if you can hear from my accent, but I'm Israeli. And when I was about 32 years old, I decided to move to the US. I wanted to learn how to buy real estate, how to manage companies, how to build companies. And so I went to MIT. I got my MBA degree in 2016. When I graduated, I moved to California, and shortly after opened, started Blue Lake Capital. And until today, we buy multifamily assets, and we're working with investors, with private funds, high net worth individuals, family offices. And so together we buy assets. We manage those assets for investors and, sell the assets after 3 to 5 years. So, that's what we do today. And kind of that's a very kind of short, description of how I got to where I am today.
Wow, what a fabulous and comprehensive background you have, and such thorough preparation to go into real estate investing. Why did you select one of the most expensive markets in the country to settle in?
That's a very good question. I think, I was actually traumatized from the hard winter. If you lived in New York or Boston, 2014, 2015, it was an all-time record. The winter was, especially challenging, and the amount of snow, I've never seen so much snow in my life, and it was extremely cold. And so it was pretty much my decision was weather driven. I wanted to be where the sun is, and I like the energy in California. I like the beaches, the fact that it's very diverse. You have nature, you have entertainment, basically you have everything. It's a very, very expensive, state. And I'm not a resident of California anymore, but it was good for that time. I learned a lot, great food, great weather, very interesting people. But that's what led me to California, mainly the weather.
Yeah, well, it is a beautiful state in many, many respects. It's actually the state of my birth, although I've never lived there. I mean, I did for the first 6 months of my life, but but my parents moved to Colorado when I was 6 months old. But
Where were you born?
I was born in Compton, California. So my dad was in the Air Force and stationed close to there. So, although he grew up there, actually, he was born and raised, and so my grandparents were there, and so I visited there, and many other reasons. I visited the state. I love it. I really, California, but I wouldn't want there. But Israel has some. I mean, they're desert there, so they have some extreme weather, don't they? I don't guess they have a lot of snow, but it gets pretty cold there in the wintertime, does it not?
Depends, maybe up north, but around Tel Aviv where I used to live, it's pretty mild.
Oh, really? Okay.
So I'm not used to snow. And I
Yeah.
remember in Cambridge, I looked, I think it was on the 20th, whatever floor, I rented an apartment, and I looked down from the window, and I saw someone skiing in the street. It was that extreme. The train was shut off. I mean, everything
wow.
was. I think it was the first time in 100 years or so that MIT was closed. It never
Wow.
happened before. It was
Yeah.
very, very extreme, and we were told not to drive. And I learned for the first time how to drive in a snow blizzard because I had to. I had to service my car before a ski trip, so that was scary and probably not the smartest thing I've done. But it was pretty traumatic, and so
Yeah.
yeah.
Yeah, well, that would be quite a shift then.
Yeah.
Yeah. So, well, anyway, fascinating things to talk about, Ellie. But let's get into real estate since that's what
Yeah.
we're here for today. So, how to dream boldly and execute on it.
How to dream boldly. I think it starts and ends with your mindset. And the one thing that I've noticed just by looking at very, very successful entrepreneurs and businessmen, I'm fascinated with patterns because I think there's a lot of power to data. And when I was looking at a younger age at all the wealthy people that I knew, they all had one thing in common, and that was real estate. And so that's one thing that I've noticed. The second thing that I've noticed is, and that goes, back to your question about how to dream, big, how to dream boldly. They were comfortable with uncertainty. And that's what separates, I believe, the 1% or the wealthy from everyone else. Most people, before they open a business or before they invest in a significant amount of money, they feel comfortable if they have a high, if they know what is a high likelihood of a certain outcome, 80, 90%, whatever you feel is that spot for you. And if there's uncertainty, they're not comfortable moving forward. And for a lot of the people that I saw around me that were very successful, they were comfortable with uncertainty. They were comfortable not knowing everything there is to know when they took the first couple of steps in an investment, business, venture, whatever that was. They were comfortable with being uncomfortable and with saying, we're going to figure it out as we go. So, I can share an anecdote about that, just an example. When COVID hit, we decided to keep buying. I thought it was a great opportunity because all the other competition that basically disappeared. As a buyer, all of a sudden I was not competing almost with anyone. And I said, wow, that's a great opportunity. And what I was not sure of is, what's investors' appetite? Are they going to invest? Are they going to feel comfortable writing a check? And that was before everyone knew understood in late 2020 that actually multifamily is going to do just fine. It's actually the best investment vehicle, at that point. And I was comfortable taking the risk. And when we're talking about deposits, non-refundable deposits that can range up to $2-3 million, I was okay taking that risk, not knowing if we can actually raise the amount of money. It was actually the biggest raise we've had until that point, and it was very uncomfortable. We weren't sure, and I said, you know what, I'm comfortable taking that risk, and we're going to figure it out, and we did. And that's part of dreaming, being bold and dreaming big, being comfortable with not knowing exactly how you're going to do it, and be certain in your abilities to figure it out one way or the other.
I think that, that has to be an important concept there. And yet, before you took the leap into real estate, you had a much, much, much more powerful, much stronger, much, much more well-developed background than what most people who go into real estate have. So did you always have this mindset of I've got to be comfortable with uncertainty? Because it seems to me like you were padding your nest with all kinds of certainty before you actually made that leap.
I actually don't think there was a lot of certainty there because nobody teaches you how to raise money and how to speak to investors. Actually managing an asset, knowing how to buy right. I took an underwriting class at MIT, but it wasn't, there's a huge gap between what they teach you, in school and what's happening in real life. And so I actually took a mentor to help me learn how to start, the real estate business. So there was a lot of uncertainty, but, even until that point, when I went to MIT, I was broke. I had no money, and I actually took a $200,000 loan, which was a huge amount.
Wow.
Still is a big amount. And I remember people around me saying, you were crazy. You can buy, that's a down payment for a house or 50% of, what are you doing?
Yeah.
You might not be able to recoup that investment. And I said, I know, and I didn't really know, but I convinced myself. I said, I know that it's going to pay off. I'm going to be fine. And, and I was. I think maybe it's part of your personality that I'm always looking at the glass half full. And I believe that this, if I have a very good sense and vision of what's going to happen, many, many times that's what's going to happen. And it's not magic. You can talk about the energetical, energy and other things that I'm not going to get into it. But when you decide something, regardless of how much education or certainty you have, when you decide that something's going to happen, you're communicating this with others. You and them are starting to behave consciously and unconsciously in a way that is going to put you there eventually. And so I actually don't think I had a lot of, certainty, but even now with what we're planning, I'm planning to grow the company and I'm investing a lot of my money back in the company. There's a lot of uncertainty that may not work and I'm going to lose a lot of money, but I've decided that it will work and I'm doing whatever I can to make it work. And there's a lot of uncertainty there. And you can say, hey, we're technically in a recession. That's a big question, whether we are or not, which I think we are. Is it the right time to expand? A lot of uncertainty there, but I'm comfortable with that because I think the opportunity cost of not moving forward is much bigger than the cost, in case I'm actually wrong. And it's going to be, the wrong kind of investment at this point.
Yeah.
So I hope that answered your question.
Yeah, very, very interesting there, Ellie. So thanks for sharing that. Can you talk us through that first leap into real estate after you'd finished at MIT and you moved to California, putting your company together, making those first steps into business? And certainly there had to be a lot of uncertainty there. But what all was going on?
So actually, when I graduated, I went to work for a tech company for about a year. And my team was disassembled. The company was not, doing that well. And they've decided to, send everyone home, at least in my team. And I was doing business operations and they thought that it wasn't necessary to have us around. And I remember, interviewing for other companies and at some point I said, you know what, if I should start my own thing. And I had a loan to pay. I had a lease, a car lease that I had to pay. I had other things that I was in, and I had no income. And that was pretty scary. And I've decided to take the leap and invest in myself. I borrowed some money and I said, you know what? I'm going to do this. I'm going to start, but I'm going to get educated and I'm going to pay someone. And I remember before I took the loan, after I paid my mentor at the time, I had about $200 left in my account. And I said, I need to borrow some money so I can start hiring people, traveling, meeting investors, going to conferences, learning what I can. And that was kind of my journey. And it was a bit scary, I have to say, because for the first time I was making a 6-figure salary. And so to say goodbye to this, because I knew I could have gotten another job, very high, high paying job, but I decided not to. So, first couple of years, you don't make much. and I kept borrowing money to be able to pay for softwares and travel and employees and whatever I needed to do. But like any investment, at some point it may pay off, and that's what happened. But could have gone the other way.
Yeah, absolutely. Well, that took a lot of courage to be certain and to keep borrowing on top of borrowing with no income coming in. That had to be extraordinarily stressful. We'll talk about that first capital raise. How did you do that? With clearly more liabilities to your name, at least financially. You had some very good credentials behind you, didn't have financial assets backing you.
Yeah, it's a very interesting question, because I found a way for every, problem, there's a solution. The question is how easy it is for us to see it. And so for me, I was unable to get a deal on my own, especially not guaranteeing anything. I didn't have any, my net worth was probably negative at that point. And I said, how can I dip my toe in the water? How can I get started? And I partnered with someone that had the net worth and liquidity, that had the ability to raise money and to do everything basically. And I found a way to add value to that company, to that person. And that's how I got started. And, part of me always wanted to do things on my own and start right away and control the deal and run it from start to finish. But this is the ego speaking, saying you need to be in control. You need to run everything. This is, your company. You need to run the show. And in business, I'm doing my best to take emotions aside, whether it's fear, sadness, excitement, even in the ego, I'm trying to put them on mute. Because every time there was ego involved, the deal went sideways, or there was an issue that cost us a lot of money to fix. And I tend to partner with people and also my investors, most of them very easygoing, trusting, just good people, great people. And I'm trying to, even with, business partners, I'm trying to have the same kind of, the same theme. And so when I put my ego aside, I realized if you want to do a large deal, it'll be easier for you to partner. So you're not going to manage the deal from start to finish, and that's okay. And the funny thing is, I went to my father-in-law and I said, "Hey, I'm starting real estate. I'm starting real estate investing, company, and I'm going to buy multifamily assets. And, I want you to invest with me." And he looked at me and he said, "Why would I invest with you? I've been investing with, certain company that he mentioned. They've been around for 30 years. They've been providing me with, great returns. Why would I take a chance?" And so I had to convince him that he should be betting on me as well. And, he owned a certain business, and I told him, "Listen, I'm like you 30, 40 years ago when you started, you were competing against the big guys, and that's me right now competing against the big guys." And he said, "You know what? Let me think about it." And, he came back the next day and said, "Okay, I'll invest something with you." And he was my first investor, which I'm very grateful for. And I'm grateful that he didn't just write me a check, but he said, "You know what? I don't know. Should I? I mean, it's a business, decision after all." And but that's how I started. I basically I didn't have. I think he was the only person that I actually knew that invested. Everyone else came through, marketing, social media, speaking engagements, people that I haven't met before. Some of them became my friends. My early investors, some of them are close friends of mine today. But that's how I started. I found someone that needed some help. I found what they needed. And so, it could be that you're partnering, maybe you can bring deals, or, maybe you can bring relationships to the table, or whatever that is. There's always something that someone needs. Doesn't matter how big or small they are. There's always that one thing, and you just need to find it and find what your value is, and that's how you can get into the industry and make business.
What was the value that you added to that first partnership?
And so for that partnership, some of it we were actually looking at a very similar deal, at the same deal. And so I had, some knowledge about the deal, because we were actually, my team was underwriting it. But when it comes to, it could be anything, it could be management, equity, whatever that is, you can find a way, to add value. And we just found what he needed at that point. But, these things, they don't happen in a vacuum. And so it takes time to build those relationships. It takes time to meet people, talk with them. It's just like dating. Nobody, or at least no one that I know, is getting married after the first date. It takes time. It takes time. It can take 3, 6 months, 12, 18 months until you're ready to make that move, and people's and groups' needs change over time. And so you gotta, keep those relationships going, keep conversations going, and not give up if it doesn't work, because at some point it will work.
And it works sometimes in one situation and not another. And that's just the way it goes. Yeah, it would be nice if we could just snap our fingers and everything comes together, but it just doesn't work that way, does it?
Wouldn't it? Yeah.
Well, a lot of things we could go into, but we're running out of time here. So talk to us just a little bit here and real quickly about sourcing off-market property. Yes.
Yeah. And you know what? This is kind of that's what everyone wants. Everyone wants an off-market deal. Depending on the deal size, that could be very hard. So for us, some parts of the cycle when real estate is let's say a year ago, it was very, very solid, low cap rates, very hard to find $100 million deal that is off-market, because those owners are very sophisticated, large corporations. They're not in a rush to sell. They go through the same process. They market the deals. So that's one challenge, that it's very hard to find, those deals. If you're buying smaller assets, 5 million, 10, 20, then you do, it's possible that it was owned by, a doctor or a lawyer that bought it years ago and now wants to sell it quickly, doesn't want the publicity. They know that once it's it's marketed and it gets a lot of eyes, and they want to be, keep it private. So it depends on the deal size. Today, I can tell you that we have a lot more off-market deals that we're looking at, because sellers still remember what they could have potentially get for the assets if they put them in the market 6 months ago, let's say, or a year ago. And it's very hard for them to say goodbye to. Sometimes we look at the numbers. We bought an asset that with a different cap rate would have been 10 million, 8 million more. So sometimes sellers would go off market even for very large deals just to test it out and see if they can hit the number that they want. And if they do, fine. If they cannot, then they'll wait until the market stabilizes a bit, and then they're going to put it back in the market, and then market it. But they don't want the bad publicity of trying to sell something just to pull it off market and then put it back in the market a year later, 6 months later. It's just going to make it doesn't look good. And it raises some, red flags, even if they're not there. Buyers are questioning what happened. Why couldn't you sell it 6 months ago? It's not going to be as desirable as, hey, here's a brand new deal. Look at it. So right now, it's much easier to find those deals. And as you become more active, you're, basically when there's an off-market deal, you want to make sure that you're on the short, the first kind of 3 groups that the broker calls and says, hey, look at those deals. They're off-market and we know you can close, but you're one of the few groups that we called, tell us if you wanted. And if not, then we're going to take it to market, or we're going to, maybe pause right now and revisit it 6 months, 3 months down the line.
Yeah, because once it does go on market, there's always that record and you can't erase it. So yeah, so that makes sense why people would certainly do that. Well, Ellie, tell us about your company and what it is that you have to offer our viewers and listeners.
Sure. So I think I mentioned at the beginning that we're multifamily owners and operators, and we like to buy Class B assets in very strong locations. So I'm always going to go for the asset that is in a strong location with a strong tenant base. And we buy assets when we see that the rents are under market and when we can renovate the units and then basically increase the income by increasing rents. And so, generally speaking, that's what we've been doing. And to date, the net IRR to investors has been 30.9% with about 1.7x in equity multiple. We like to buy assets for 5 years, but sometimes we will exit early. And I think probably 36 to 48 months is 27 months should be our average hold period, because if I can exit early and exceed the returns that we've projected, because I never put 30% IRR in front of my investors. Even if I see it on my end, I'm going to use a lower number. And of course, the past performance is not an indication of future, success. Anything can happen. It's an investment. You're being rewarded as an investor because you're willing to take that risk that you may not, get to the projected returns. And right now we're actually, we have a portfolio, 2 assets between North Carolina and in Georgia. So two very strong submarkets in Atlanta and right outside the Research Triangle in North Carolina. And so 2022 is the last year that you can get 100% bonus depreciation and maximize the tax benefit. Next year, it's going to go down to 80% and then 60%. So if you're interested, you can always go to info@bluelake-capital.com for more information. But, I love those deals. I can tell you, we're not the highest bid, and there were other reasons why we got those deals. And so I'm investing my money in those deals. It's great assets, very strong tenant based. And so that's what right now we are open for investment. And, I know I said earlier that I'm putting my emotions aside when it comes to real estate. Once I get under contract, I am excited. Once the opportunity is ours, it's and that's what's happening here basically. So
yes, indeed, we're emotional people, whether we want to admit it or not. We can't. We're human. We can't leave those emotions behind.
That's true.
Well, Ellie, wonderful having been with you today. I'm delighted to have met you. Thanks for being on our show. And enlightened investors, once again, thanks for being with us, and be with us again in our next episode.
Thank you, Alan.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.